Welcome, friends. In this edition of today's class, basically it's a kind of a summary, or you can say revision class type of a, because here our renowned faculty CS Vivek Banerjee shall cover up the topic of fundamental security analysis and security valuation, equity portion only, equity shares only, that he has covered in our previous lectures. So basically, he will summarize all the coverage here. He will summarize all the points that he has discussed in last here, and so students, you are requested. I hope you have gone through all the lectures, previous lectures. So if you have any doubt, so please discuss in this class, because we shall take up your query on live basis. So student, please don't hesitate. Whatever your queries, please, you are free to ask any query here. I welcome CS Vivek Banerjee. He is faculty in Board of Studies. Right now, he is looking after the paper of financial services and capital market. So I think there no one can be best person other than him to take up this topic. Vivek, can you start the session, please?
Yes, sir. Thank you so much, sir. Good morning, everybody. Hi. Welcome to this session on security analysis and security valuation, this part of valuation of equity shares. So we have discussed the various aspects of fundamental analysis, technical analysis, valuation of equity shares. We have discussed various concepts of valuation of equity shares, and we have taken the practical questions also, not only in case of valuation of equity shares, but fundamental analysis and technical analysis also. The purpose of this session is to, you can say, summarize all the things which you have, which we have discussed, which you have seen. And if you have any queries, any doubt, I am happy to take it. And I will, during the course of my lecture, I will try to simplify the concept further if you have, which you may find it difficult to understand. And of course, anytime during the course of my lecture, you can ask any question. So let us begin this revision session or summary session of this valuation of equity shares, fundamental analysis and technical analysis. Students, I will begin with fundamental analysis. So fundamental analysis, as we have discussed, is basically the analysis of the fundamentals. So what are the fundamentals? Is basically an analysis of three things. It is basically the analysis of three things, which is called EIC. Which is called EIC. Means E, it is economic, I for industry, and C for company. I will give a brief example so that initially it should be understood, and then I will take the revision topic wise. Economic, industry and company. Let us take a simple example. GDP growth rate. जो GDP growth rate होता है वो सबसे important होता है, क्योंकि GDP growth rate जो है वो directly और indirectly सारी चीजों को affect करता है. Industries को भी affect करता है, economy को affect करता है, companies को affect करता है. तो GDP growth rate, GDP, the value of all goods and services produced in the economy. The GDP growth rate is projected to be, is currently now 6%, and it is projected to be 7%. Some of the experts say that it might come down to 6%. RBI says that it will remain at 7%. Some of them are saying that it will be between 6.5% and 7%. Whatever may be. For example, GDP growth rate is most probably expected to increase at 7%. So what will its repercussions? Its repercussion is directly on the industries and the company, and it will affect the, I will take the economic portion, taking the economic portion first. So GDP growth rate will affect the entire, so GDP growth rate is projected to be 7%. Growing at 7%. So it will have its effect on the companies. the company's productivity will increase, its sales will increase, and it will also impact the employment. It will also impact the employment also, because companies I apologize for it. Fundamental analysis, EIC, economic, industry, and company. Economic analysis, we begin with GDP growth rate. GDP growth rate is expected to be increased at 7%. So it will have its effect on the companies. Company's profitability will increase, its sales will increase, so it will be its effect on the employment also. So employment generation will lead to higher salary or more income. So they will invest in the companies also. Consumption, more consumption. So more consumption will again lead to higher sales and profits of the company. Higher sales and profits of the company. Higher sales and profits of the company. So this is the effect of the economic analysis. So while doing economic analysis as a fundamental analyst, you think that if the GDP growth rate is expected to be higher, then it will affect the company's profitability. Most of the companies are likely to do well, but not all companies or not all industries will do well. ऐसा जरूरी नहीं कि सभी इंडस्ट्रीज अच्छा परफॉर्म करे. कुछ इंडस्ट्रीज, ज्यादातर इंडस्ट्रीज अच्छा परफॉर्म करेगी और कुछ इंडस्ट्रीज अच्छा परफॉर्म नहीं करेगी. तो इसलिए सेकंड स्टेप जो आता है वो होता है इंडस्ट्री एनालिसिस. सेकंड स्टेप आता है वो होता है इंडस्ट्री एनालिसिस, कि इकोनॉमी तो अच्छा कर रही है पर कौन कौन सी इंडस्ट्रीज हैं जो कि उसमें भी अच्छा करेगी. तो इस पे सबसे पहले जो है वो देखेंगे गवर्नमेंट पुश, गवर्नमेंट्स इंफ्रास्ट्रक्चर पुश. तो गवर्नमेंट अगर इंफ्रास्ट्रक्चर पे पुश करती है, फॉर एग्जांपल रिनोवेशन ऑफ न्यू रेलवे स्टेशन, you can construction of new railway station, renovation of existing airports, construction of new airports, construction of new ports, renovation of existing ports, highways, roads. These all will affect the various industries. The particular industries which will be directly affected will be the steel, जिसका कि इंफ्रास्ट्रक्चर और कंस्ट्रक्शन एक्टिविटीज में इस्तेमाल होता है. स्टील, सीमेंट, आयरन ओर, and the real estate companies. Real estate companies are also likely to do well, which will get the contract for such projects. एक और एग्जांपल लेते हैं. गवर्नमेंट्स PLI स्कीम, गवर्नमेंट का प्रोडक्शन लिंक्ड इंसेंटिव स्कीम. Under the government's production-linked incentive schemes, the government gives subsidies to various domestic manufacturing companies. इसमें भी एक सिंपल एग्जांपल लेते हैं लिथियम का. आपने रिसेंटली न्यूज में पढ़ा होगा कि लिथियम के कुछ रिजर्व्स जो हैं इंडिया में खोजे गए हैं. तो लिथियम यूज होता है बेसिकली कई चीजों में यूज होता है. एक जो यूज होता है वो होता है मोबाइल हैंडसेट. तो डोमेस्टिक मैन्युफैक्चरिंग कंपनीज जो कि लिथियम का इस्तेमाल मोबाइल हैंडसेट में कर रही है, तो उस केस में उसको फायदा हुआ क्योंकि वो गवर्नमेंट से सब्सिडी उसको मिल रहा है. एंड दोस इंडस्ट्रीज व्हिच आर इन दिस मोबाइल हैंडसेट, डोमेस्टिक मैन्युफैक्चरिंग मोबाइल हैंडसेट बाय यूजिंग लिथियम आर लाइकली टू डू वेल.
विवेक जी,
यस सर,
प्लीज एंश्योर कि जो व्हाटएवर यू स्पीकिंग इन हिंदी आल्सो कवर द सेम इन इंग्लिश आल्सो.
ओके सर.
Because there are some students who may not understand the Hindi So whatever you speak in Hindi, also cover it in the same in the English also.
Okay, sir. Fine.
Okay. Okay.
Now, another example. Another example is the banking sector. The RBI is actually monitoring the banking sector and urging it to reduce its NPS. And many banks have actually reduced their NPS. So banking sector is likely to do well. Another example, the auto sector. And auto sector, especially the electric vehicles. So government is also giving a big push to the electric vehicles, and it is worldwide being encouraged, the electric vehicles industry. So those automobile companies which are in the manufacturing of this electric vehicles are likely to do well. So this is what the industry analysis is. Yes, the economy is doing well, but not all industries are likely to do well. So what are the industries which are likely to do well? So this is what the industry analysis is. Then, in the same way, not all companies are likely to do well in a particular industry. Not all companies are likely to do well in the industry analysis. So what are those companies which are likely to do well? So in these cases, first of all, the company's financial have to be seen, and the company's management has to be seen. There are other factors also, but these two are very important factors, the financials of the company and the management of the company. And also, I have discussed during my lecture on fundamental analysis that is two things are important in this case, the general observation of the company and the moat. I will just, if you have a general observation, if you are reading the financial newspaper daily, if you are looking after the various news channels, you will be able to understand it somewhat. Let us take a company, the steel sector, because just now I have taken the steel sector. And in the steel sector, there is a company, not a very big company, relatively a smaller company, APL Apollo Tubes. You must have been heard in the newspapers also, or read in the newspapers also, that it is going a major expansion. It is undergoing a major expansion. And major expansion, but at the same time, it is likely to reduce its debt. ठीक है, एपीएल अपोलो ट्यूब्स अपना मेजर एक्सपेंशन कर रही है, साथ में अपने डेट को भी वो रिड्यूस कर रही है. कैसे कर रही है? वो डेट अपने इंटरनल रिसोर्सेज से, बाय वे ऑफ इट्स इंटरनल रिसोर्सेज. Okay, so you do a company analysis. Yes, the GDP growth rate is likely to increase. And some majority of the industries are likely to do well. Then you do a industry analysis. What are the industries which are likely to do well? Yes, the government is giving push to the infrastructure sector, the government's PLI scheme, the banking sector, the electric vehicle sector. Down to the company analysis. Yes, what are the companies which are likely to do well? You heard in the newspaper, general observation that yes, Apollo Tubes undergoing a major expansion in the future, and at the same time it is likely to reduce it. How? By its internal resources. So you can see that yes, maybe it is likely to do well by your company analysis. So this is what a brief explanation of how to go about it as a fundamental analysis in case of economy, industry, and the company. So if you have a query up till now, you are free to ask it. I'm happy to entertain your queries. Okay, T is basically a T test. I will explain it with the efficient market hypothesis also. T is basically the, you can say, just estimating the, you can say, deviations, estimating without undergoing the standard deviation, estimating the, you can say, whether the market is efficient or not. If the information of standard deviation is not given, then this t-test is generally applied. So in that question, which I have taken in the case of technical analysis, the run test, we have calculated the standard deviation, but without if we do not apply the standard deviation, then what should be the situation? So in that case, the t-test was helpful. Okay, point and figure chart, I will noted it. When I come to technical analysis, I will explain the point and figure chart also. Yes, Vansha, this fundamental analysis takes into account micro as well as macroeconomics of elements. Macro, the entire economy, for example, the GDP, the inflation, these are employment, these all contains the macro, it affects the entire economy. Micro elements come down to the, you can say, particular company, how it's doing actually. Basically, industries deal with government fiscal policies. Not necessarily. Actually, the industries in which the government is giving a push is likely to do well. But there are various industries which by its own can prosper. But it also reflects upon the foreign market also. Because if the currency market is in favor of India, the is not many fluctuations in the, you can say, rupee and dollar, then those companies which are exporting or which are in the import business are likely to do well. So there are various factors on some of the industries which are generating good profit because of a certain factor. For example, inflation affects some of the industries also, because as you know, the moderate amount of inflation is good. So if there's a moderate inflation, most of the companies are likely to do well because the selling price will be higher, and because of higher selling price, they will be to generate more profit, and that will ultimately reflect in the share prices also. So there are various other factors also besides the, you can say, the government's push. Koshiki, I have already just told you in the technical analysis portion that in the run test question, we have not multiplied standard deviation to T. T and standard deviation, this is concept is separate, as I have said. The T test is applied if the standard deviation could not have given, if the information of standard deviation was not there, then this T test is generally applied. Kaushik is again asking that GDP, what is the GDP standard which is considered good? There is no standard actually. If you can compare it with the previous year, the GDP growth rate is, you can, for example, I'm taking a hypothetical example. It was 5.5%. This year it is 6%. It is likely to grow at 6.5% to 7% next year. So you can say that yes, the GDP is on the, you can say, growth path. So as a fundamental analyst, you can make out, yes, the economy is likely to do well. So most of the industries are likely to do well. So the most of the companies will also do well. Then with this bond valuation, bond question will be taken by Ashish sir. Don't worry about it. So if any query, or shall I move forward? Okay, fine. So in case of economic analysis, various factors have been taken, such as I said, GDP, and you can say inflation. Industrial sector is also affected by it. And another portion which I have explained in my previous lecture is monsoon, which also plays a big part, especially in case of agricultural commodities, especially in case of agri-commodities, agricultural goods. And we have also discussed the various, you can say, the techniques used in the economic analysis. That is the...
Vivek sir, 2 minutes.
Yes,
only.
sir.
Actually, there is one student is asking about the bond queries. Okay, so dear student, please note that. Of course, we shall upload the recorded lectures. So from recorded lectures, I think your doubt will be clear. Or if in case still they are not clear, so I will take the live session on 14th June to sum up the same session on the bond valuation. There you can ask your queries. So don't worry, we have noted your queries and we will of course reply the same. Okay, Vivek sir, please continue.
Okay, sir, thank you. So the various techniques which are used in the economic analysis, anticipatory survey, and barometer indicator approach, and the economic model approach. All these we have seen. An anticipatory survey, a survey is constructed, generally taken place regarding the construction activities and various, you can say, activities into the economy. Barometer is an indicator approach. There are 3 parts to it. There's the leading indicators, coincidental indicators, and the lagging indicators, which we all 3 have discussed. Leading means what the economy of the future should be in terms of GDP, in terms of interest rates. And the coincidental indicators means what the economy actually is, because if the GDP growth rate is likely to do well, this will also be this also will coincide with the personal disposable income of the people. So high GDP growth rate will lead to higher personal disposable income of the, you can say, the of the people. And lagging indicator, we see whatever happened in the leading indicators, barometer approach will ultimately affect the lagging indicators. For example, the you can say the employment generation. Then we came to the industry analysis. We have seen the various, you can say, factors which affect the industry analysis. If you have any query in any of these factors, please ask. The main factors, I will just summarize it. The very important part of industry analysis is product life cycle. Product life cycle, as you know, first is the expansionary stage. Expansionary stage is the stage where the company is in an extraordinary growth period. Some of the sectors likely to be in the expansionary stage are EV sector, electric vehicles, or you can say which are actually in the artificial intelligence or robotics. So these sectors are likely to be in the expansionary stage. Then comes the maturity stage. Various sectors in India are in the manufacturing state. You can say FMCG, pharma, IT sector. And then the third product life cycle is the declining or stagnation stage. So company which are in this declining or the, you can say, stagnation phase are, you can say, the BPO companies, the business process outsourcing. And others, for example, CDs. So these are actually in the declining in the stage. declining or stagnation stage. If you see the present situation, you can say the entertainment industry is also in the declining stage. When will it grow up? One can never say. You can take the example of various, you can say, for example, PVR, Inox, and various other sectors which are incurring actually losses year after year. The reason is that because of the, you can say, OTT platforms, and that is why, and the less personal disposable income in the hands of the, you can say, middle class and lower middle class. That is why the many, you can say, multiplexes have been closed in the tier 2 and tier 3 cities. So that is why they are actually experiencing losses, and at the present moment they are in the declining stage. So the product life cycle is very important part of this, you can say, the fundamental analysis. And we have discussed other things also, for example, demand supply gap, those industries which have high demand and the supply is less, then these industries are likely to do more. We have seen the government attitude. I have just discussed the sectors in which the government is actually encouraging it are likely to do well. Steel sector, cement, etc. We have just discussed. And the state of competition, the industries in which the state of competition is more, for example, the mobile handset, for example, there are various companies which are actually competing for their place in India. You can name it: Vivo, Oppo, Samsung, and you can say Redmi. Apple is always there. So there is a state competition, and that healthy competition that is likely to, you can say, urge the companies to do well, and also it is beneficial for the consumers also. So these industries are likely to have a, you can say, positive impact on the mindset of the investors. Technology and research also play a very big part. The industries which are actually adopting the artificial intelligence, the robotics faster are obviously likely to do well. Then we come to the, and there are various, you can say, techniques which are used in the economic analysis. Is the regression technique, which is actually used in the economic analysis. Regression is basically a statistical technique in which the value of dependent variables is found out on the basis of the independent variables. For example, an independent variable is, you can say, GDP growth rate. Independent variable is GDP growth rate. So GDP growth rate has an effect on the, you can say, sales of a company. So higher sales. So higher sales is actually dependent upon the higher GDP. So GDP is an independent variable. So regression basically tests how this independent variable is affecting this, you can say, the dependent variable. So this is a statistical technique which is used in the economic analysis. Then we come to the details of industry analysis. Another technique which is used in the, you can say, industry analysis is input-output analysis. Input-output analysis is very important analysis. A thing which is an input is actually, you can say, an output is used in the final manufacture of input also. For example, car is an, you can say, output. In this case, various inputs are used. You can say steel, aluminium, electronics, plastic. So prices of any effect on this means if the prices of the steel increases, it affects the prices of the car also. So basically, this is what input-output analysis is. This is a direct impact. We have seen the indirect impact of this also, because if the particular industry is doing well, the workers will be employed. So these workers will use their salary to purchase more goods and invest in this consumption. That will be the third impact of this input-output analysis. Then we see the company analysis. Company analysis, various factors which actually influences the company. The main thing is, as I've discussed, the financials of the company and the management. So financial, what we see, we divide the, as a fundamental analyst, we divide the financial into actually four parts. First and foremost is profitability. So under profitability, we generally see the company's sales growth. We take an hypothetical figure. For example, company sales growth tentatively, maybe it should be at least 15% in last, you can say 10 years. Okay. Profit growth, 15% last 10 years. Good return on capital ratio, ROC, good return on equity ratio. So all these aspects have to be checked regarding the profitability part in the company analysis. So जब आप company analysis करते हैं as a fundamental analysis, तो financial में सबसे पहले profitability को देखा जाता है, कंपनी की profitability situation कैसी है, इसमें कंपनी की sales growth कैसे हो रही है, पिछले 10 साल में, 5 साल में 15% या उससे ज्यादा हो रही है तो अच्छी बात है. प्रॉफिट अगर 10% 15% से ज्यादा हो रही है पिछले 5-10 साल में तो अच्छी बात है. रिटर्न ऑन कैपिटल एम्प्लॉयड अच्छा है, रिटर्न ऑफ इक्विटी कंपनी का अच्छा है. तो दैट फाइनेंशियल, यू कैन से फाइनेंशियल एस्पेक्ट फ्रॉम द पॉइंट ऑफ व्यू प्रॉफिटेबिलिटी इज गुड. पर ओनली प्रॉफिटेबिलिटी से सेटिस्फाई नहीं होना है. फर्दर विच थिंग्स will be looked after is liquidity, which is also very important. That is a short term solvency position. कंपनी जो अपना you can say कंपनी के पास sufficient cash है कि नहीं शॉर्ट टर्म के लिए, is the company has sufficient cash in the short term. तो उसके लिए क्या चीज देखते हैं current ratio. We see the current ratio. Current ratio is generally considered 2:1. This is not a hard and fast rule because some of the companies have to keep more working capital. For example, in case of manufacturing company, more working capital is required. In such cases, the current ratio may be less than 2:1. But general criteria, it is 2:1. Liquid ratio, 1:1. Liquid ratio, as you know, inventories are deducted, inventories and prepaid expenses are deducted from the current assets. So these two factors are important. Means the company has good cash in its hand to meet its short-term, you can say, working capital requirements or to meet its short-term debts. Another very important aspect in liquidity, जो कि generally liquidity analysis में देखा जाता है, वो है interest coverage ratio. Interest coverage ratio. कि whether the company has sufficient profit or not at its disposal to cover its interest. So it's basically EBIT, interest before interest and tax upon interest. So the general criteria, again, it is not the hard and fast rule, but general criteria, fundamental analysis, see that interest EBIT should cover the interest by at least 3 times. Means जो EBIT है at least interest का at least कम से कम thrice तो है, कम से कम 3 times तो है at least. तो इसका मतलब वो sufficiently interest को cover कर रहा है. अगर कंपनी का ज्यादातर profit, if companies most of the profit are utilized in paying its interest, then what will remain? So interest coverage ratio is also a very important aspect in the fundamental analysis. Then the fundamental analysis narrowed down to solvency analysis, solvency part. तो जो financials देखते हैं तो solvency को भी देखते हैं. solvency में सबसे जो important चीज जो देखी जाती है वो है debt equity ratio. debt equity ratio. So debt equity ratio generally as a fundamental analyst, the general criteria is that debt should be at least less than 50% of the equity. क्योंकि डेट जितना कम रहेगा वो इन्वेस्टर्स के पॉइंट ऑफ व्यू से वो उतना अच्छा रहेगा, वो सिक्योर रहेगा. But some of the companies not able to maintain it, especially the manufacturing companies. In those cases, the debt is generally high. But some of the manufacturing companies are also presently trying to reduce its debt. As I have taken the example of APL Apollo Tubes, which is actually conducting a major expansion, but at the same time, it is reducing its debt also by utilizing its internal resources. So manufacturing companies भी अपने डेट को रिड्यूस कर रही है. उसके बाद जो एक और अनदर इंपॉर्टेंट एस्पेक्ट besides profitability, liquidity and solvency is actually the cash flow. For this, the cash flow statement is taken. Two things are very important. The company's cash from operation. The company's cash from operation should be positive because ये net profit से related. This is related to net profit. So whatever portion is in the means whatever net profit portion, if it is in cash, then it will be obviously beneficial to the company. Because company के पास cash है sufficient. So preferably the company's cash flow from operating position should be positive, and preferably the cash flow statement. The cash flow statement means all the cash from operating activities, cash from financing activities, cash from investing, cash flow from investing activities should preferably should also be positive. So at a fundamental analysis, these things are generally taken by it. The financial profitability, sales growth, profit, return on capital employed, return on equity, liquidity situation, current ratio, liquid ratio, interest coverage ratio, then solvency ratio and the cash flow statement. Then last but not the least, the management analysis. The management part is very, very important, if not less, if not more than the financial analysis. So in management analysis, what the investor actually see. In management analysis, the investor first of all see the company's management, the company's obviously the company's financials and the management discussion analysis report. So company's management discussion and analysis report is also a very important part. Then you can say the conference calls. In case of some of the companies, the CEO and CFO of the company held conference calls after the meeting, after the annual general meeting, after the general meeting. In those conference calls, the CEOs, the chief executive officer of the company, the chief financial officer of the company generally answer the queries of the investors. So that is, you can say, very important to attend those conference calls. An extract of the conference calls are also given that can also be seen by the investors to judge that, yes, how the management is doing and what is the plan of the management in future. And then you can say a background check is done by the fundamental analyst in case of management analysis. So what background check is generally done by the, you can say, a fundamental analyst. Who are the promoters of the company? Who are the directors of the company? How many directors are there in the company? How many independent directors are there in the company? How many executive directors are there in the company? Whether the proportion of independent directors and these executive directors are meeting the criteria which is given in the, you can say, the SEBI LODR regulation, that independent director should be, you can say, 1/3 of the total number of directors. If the chairman is, you can say, executive, the chairman is non-executive, then it can be 1/3. If the chairman is executive, the independent director should be, you can say, half. So these are the things which have to be observed by the, you can say, investors. Then salary of promoters versus net profit. salary of promoters to the net profit. Company's net profit is increasing and the salary of promoters are increasing at the same time. That is well, good enough. But if the net profit is declining and the salary of promoters is increasing, that is a red flag. It means the management is not efficient. As it was happened in the case of ILFS. ILFS में क्या हुआ था? एक कंपनी का एक्चुअली लॉस हो रहा था, पर कंपनी के जो प्रोमोटर्स थे उनकी सैलरी थी वो इंक्रीज हो रही थी. तो ये सिचुएशन नहीं होना चाहिए. ये डिनोट करता है कि मैनेजमेंट जो है एफिशिएंट नहीं है. देन मैनेजमेंट सक्सेशन प्लान. Whether the management has sufficient good management succession plan, also whether CEO of the company is grooming someone talented so that he can be the next CEO. Some of the companies have a good management succession plan and they are very transparent about it also. For example, in case of TCS, for example, in case of Infosys, especially Infosys. So management succession plan also shows the, you can say, efficiency and the confidence of the management. Then again, sales, a very important part. Sales is because of sales volume. This is the very good indicator that sales is increasing because of sales volume and not because of sales price. So if the sales is increasing because of sales volume, it is also showing the efficiency of the management. Sales is increasing, I would say otherwise. Companies' fixed assets are increasing and at the same time, sales is also increasing. Good enough. But the company's fixed assets are increasing, but the company's sales is not increasing. It also, then it is a red flag. It shows the inefficiency on the part of the management. Then, company's expansion policy. Company की expansion, production, capacity. Company की production capacity, उसके volumes, how it is. So it also shows the efficiency of the management. And last but not the least, the dividend payment. Generally, good companies pay consistent dividend. Some of the good companies, dividend paying companies ultimately come to mind. The IT companies, Asian Paints, Dabur, ITC, they generally pay good dividend on a year-on-year basis. So this is what the management analysis is. So in company analysis, the main emphasis of the fundamental analyst is basically, you can say, financials and the management. We have also seen the techniques which are used in the company analysis, the techniques which we have discussed also, the correlation and regression. We have also seen the trend analysis. I'm not discussing it again because we have already discussed it. If you have any queries in this case, I'm happy to entertain it. And decision tree analysis. So these are the techniques in company analysis which we have seen during our discussion on fundamental analysis. So if you have any query in this, I will first of all attend the queries. Yes, Mansha, yes, climate is, you can say, is the buzzword because of this, you can say, global warming. So yes, it is also at an expansionary stage and it is a good point raised actually. Okay. Another corporate culture, employee turnover, organization policy structure, practices towards environment, social, government. Are these factors come under company fundamental analysis? Yes, Mansha, this is corporate culture, employee turnover, organization policy structure, practices, environment. Yes, this is also a very good point raised. These are also come under the, you can say, company analysis under this, you can say the management part, because the corporate culture, it is employee turnover, is company's employee turnover is high, zyadatar employees absenteeism is high in the particular company. So that company will not be looked into good eyes by the investors. So, and the organization policy, structure, practices towards environment, these all matter under the company. So this is also a background check which an investor can also uh, do in the case of the company analysis also, especially the management part. So these are related to whatever point you have said is related to the, you can say, management analysis. Yes, right. The most of the companies in mature stage are declare dividend, because those companies which are in the expansion stage, which are in the growth stage, generally tend to declare less dividend, क्योंकि वो ज्यादा से ज्यादा डिविडेंड वो बचाना चाहती है, और जो प्रॉफिट रिटेन कर रही है उसको प्रॉफिटेबल ग्रोथ अपॉर्चुनिटीज में वो इन्वेस्ट करना चाहती है. तो सिंस द ग्रोथ ओरिएंटेड कंपनीज वांट टू ग्रो, they actually save money by utilizing the net profits by investing into growth opportunities which will be profitable in future. So they generally pay less dividend, growth oriented companies, and the mature companies which have more liquidity at hands, and those which do not have much projects at hand are likely to declare more dividend. For example, the IT companies. Okay. Now come to the technical analysis. If you have anything in mind in case of fundamental analysis, you can ask at any time. Okay. So what is this technical analysis is, as we have discussed? Technical analysis is basically the, you can say, analysis of charts, graphs, to actually, you can say, predict the future price. And what is the basis of this prediction? The basis of this prediction is that the trends are likely to repeat in future. Trends are likely to repeat in future. And how these trends are created? These trends are happen because of the human psychology, the behavior of the people. So behavior of the people is generally very, very important in case of technical analysis. Behavior of the people is also do play a part in fundamental analysis also, but it plays a very major role in technical analysis. So it is behavior of the people. I have taken an example and by which I have differentiated between the fundamental analysis and the technical analysis. For example, you gone for a vacation, and after the sightseeing you were hungry and want to eat at some restaurant. So you there are various restaurants, 10, 12 restaurants. You are confused which restaurant to pick. You went to 4, 5 restaurants which you seem have good infrastructure and where more people are entering. So you visit 4, 5 restaurant out of 10, 12 restaurant, eat the sample food and select one of the restaurant, eat the food and get out of that. And in your friend did nothing, simply observes, and he observed that one of the restaurant which has good infrastructure, good number of people are going in, going out continuously, and you have also observed that most of the people are actually appreciating the good food. So you take the plunge, get into that restaurant, enjoy the food and get out. So these are the difference between you are the fundamental analyst and your friend is the technical analysis. So in the latter part is purely on the human behavior. In the earlier part, there was some sort of analysis, like you take the sample and then take the decision. But in the latter part, entirely it was on the decision was taken entirely on the basis of the behavior of the people, how the people are behaving. In that way, your friend has your friend took the decision. So in technical analysis, human behavior or human psychology plays a big part. There are various principles in case of technical analysis which are very, very important, which we have discussed, that the market, excuse me, the market discounts everything. Second is the prices moves in trends. And the third and last but not the least, very important, that the history tend to repeat itself. History tend to repeat itself. So all these things are interrelated. Market discounts everything means the market actually, you can say, market reflect everything, not only the past information, present information, as well as the private information also. I will take a simple example in which all these will be clear. For example, as I have taken that some event happened, you can say some dispute have been going on between the, you can say, the management and the employees. So that the news broke out and the company's market price fell. After that, another news breakout is that there is a reconciliation between the management and the labor, and everything is good. So after the news broke out, the share prices again gone up. So the market actually absorbs the, you can say, the past information also, and also the public information. Because, for example, the company has declared the financials. LIC has declared the financial statements of the company, and the company's profit has increased 5-fold in comparison to the previous year. So this will some effect on the company share price also. And this information will also be reflected in the prices. Now come to some of the, you can say, private information. First, the LIC's profits have been, you can say, declared on 24th of May. But the, you can say, the chart have been showing the positive trends 2-3 days back. So there was an anticipation. There was some private information on the basis of the Investors Act, and that was actually reflected in the, you can say, charts. So the market absorbs not only the past information, the present information, the publicly available information, but also the private information also. And the prices generally moves in trends. Prices जो है वो ट्रेंड्स पे मूव करता है जनरली. जैसे कंपनी is increasing this way and then it has come down, and it is increasing this way and it's come down and increasing this way. So this trend will continue for some time, this bullish trend, and after that it will come down for some moment. So if this sort of, you can say, have been observed previously, then the technical analysts make out that yes, this trend is, for example, this trend has been observed in, we can say, 2022. Again in 2023, this trend has been observed. So the investors can make out, yes, that this trend has been again showing this type of trends, and it is rising in the future. So it is showing a For example, if any, I will again this take Dow Jones theory. The history tends to repeat itself. For example, you can say a good this candlestick, bullish candlesticks have been observed, and for example, it is observed in March 2023. And after some time, this bullish trend is same, this bullish candle, good prominent bullish candle. Okay. It's observed in May. So a technical analyst will see, yes, that this bullish, this candlesticks, again, this is observing, it means it will go up, because last time after this bullish candlestick, the market had gone up. So chances are that this time the market will also go up. So generally, according to technical analysis, the history tends to repeat itself. Okay. Now, come to the very important part. I will discuss it briefly. The Dow Jones theory. Under the Dow, private information means insider trading. You can say that, but now the SEBI is actually very strict in regard to insider trading. Under the SEBI insider trading regulation, it is not easy to actually take place. But yes, in some form or the other, the people try to, you can say, trade on the basis of the insider information. And if they trade on the basis of insider information, that is, it reflect in the charts also. Now come to Dow Jones theory. Dow Jones theory said that there are three basic movements. Okay. Primary movement, secondary movement, and tertiary movement. Tertiary movement is basically the daily fluctuations. Tertiary movement is the basically daily fluctuation. In primary movement, is it basically related to long term, 1 year, 2 year, 3 year? So you can say in case of a particular company, is showing an uptrend in 2000, you can say 21. So 1 year it is showing an uptrend. After that, it is showing a downtrend in 2022. Again in 2023, it is showing an uptrend. So this is actually a primary trend, the long-term trend. So also on this basis, the investor can take, yes, this is bullish trend is going, can be going on for some time. So primary trend is basically for a long-term trend, long-term bullish trend. It's 2021, it is showing a long-term bullish trend. Then in 2020, it is showing a long-term bearish trend. The prices are coming down. Then in 2023, it is again showing a bullish trend. So this is what primary trend is all about. Now the secondary trend is basically, you can say it is 1 to 3 years. And secondary trend is for a few weeks to 1 year. Few weeks to 1 year. Or for example, for some weeks, the market is going on. It is showing a bullish trend. For example, you can say March 2000, March May. For 2 months, it is showing a bullish trend. And again, it is somewhat come down. Showing come down. And this period is from, you can say, May 2023 till now. Till June 2023. Till now. So this is basically a secondary trend. Means the trend which is showing in the medium term. And tertiary trend, daily fluctuation. Daily basis पे प्राइस कैसे फ्लक्चुएट कर रहे हैं, डेली बेसिस पे प्राइस कैसे फ्लक्चुएट कर रहे हैं. तो डेली फ्लक्चुएशन बेसिकली, फॉर एग्जांपल, you can say the prices of, I am taking a hypothetical example, the prices of Dabur opens at, for example, 600 and opens today, and tomorrow it is gone up to 605. Again, next day it is again gone up to 608. Again 610. And after that, it comes down to again to 605. So these are the basic fluctuations. कि डेली बेसिस पे कंपनी के शेयर प्राइस में क्या फ्लक्चुएशंस हो रहे हैं. तो ये ट्रेंड जो है वो एकदम शॉर्ट टर्म ट्रेंड डिनोट करता है. तो टेक्निकल एनालिस्ट ऑन द बेसिस ऑफ द लॉन्ग टर्म ट्रेंड, सेकेंडरी ट्रेंड, शुड द टर्शियरी ट्रेंड, एंड इट आल्सो डिपेंड्स अपॉन द आउटलुक ऑफ द इन्वेस्टर. कि इन्वेस्टर जो है लॉन्ग टर्म के लिए इन्वेस्ट करना चाहती है तो बेसिकली उसका एम्फेसिस होता है प्राइमरी ट्रेंड पे. अगर इन्वेस्टर मीडियम टर्म पे इन्वेस्ट करना चाहती है तो उसका एम्फेसिस होता है सेकेंडरी ट्रेंड पे, फ्यू वीक्स टू 1 ईयर. अगर इन्वेस्टर डेली बेसिस पे, अगर शॉर्ट टर्म इन्वेस्टर, बहुत ज्यादा शॉर्ट टर्म इन्वेस्टर है तो डेली फ्लक्चुएशन पे ज्यादा सा कॉन्सेंट्रेशन रहता है. कि इस डाबर के प्राइसेस आज 600 है, कल फिर बढ़ रहे हैं. नेक्स्ट इट मूव्स टू 605, देन 608, देन 610, एंड देन अगेन इट कम्स डाउन. सो इस तरह से वो चीजों को एनालाइज करते हैं. तो फर्दर इसके प्राइसेस कहाँ हो सकते हैं, तो इस बेसिस पे इसका एनालिसिस होता है. इन तीनों ट्रेंड को देखने के बाद 3 स्टेजेस होते हैं. तीनों सिचुएशन में भी जो डाउ जोन्स थ्योरी के होते हैं वो दिस इज द 3 stages, and it basically forms the crux of the technical analysis also. First is generally this stage. This stage is called the public participation. So I am taking an example of bullish trend. किसी कंपनी के शेयर प्राइसेस बढ़ रहे हैं ऊपर की तरफ. It is showing a bullish trend क्योंकि public is I will rather say public participation second stage. It is actually accumulation stage. It is actually accumulation stage. So suddenly the on account of any reason, the price of particular, you can say any company, you can name it. For example, State Bank of India, SBI. I'm taking a hypothetical example. So people think that yes, the bank is actually reducing its NPA and it is showing a good profitability. So let us purchase these shares. So many people are purchasing the shares of SBI and it is showing an accumulation stage. After that, after seeing that yes, the prices of SBI are going up, people are purchasing the shares, it is showing a good volume also. So more and more people are starting to participate in it. So this is the stage of public participation. This is the stage of public participation. So company shares have actually escalated very far. Then some amount of confusion for some period. if कंपनी के प्राइस बढ़ेंगे घटेंगे, ये कुछ पीरियड के लिए कंफ्यूजन रहता है. Then there is a general perception, yes, the SBI shares have reached its peaks. Let us sell it. SBI के जो शेयर्स है वो पीक पे पहुंच गए हैं, तो उसको धीरे धीरे बेचना शुरू करते हैं, तो बेच देते हैं, तो selling starts happening. So this is the selling phase. After seeing that the people are selling, some of the people starts to panic and they started. वो ये सोचते हैं कि कंपनी के प्राइसेस और कम होंगे, इसके पहले बेच के निकल जाओ. तो most of the people think that let us get out of this unless the price comes down very, you can say very low. So they start selling again. So ये जो particular stage है, this is panic selling. This is actually panic selling. तो यहाँ पे पैनिक सेलिंग होता है और बेच के ज्यादा से ज्यादा लोग बेच के वो निकलना चाहते हैं. तो ये जनरली वो जिस लेवल पे था उस लेवल पे आ जाता है, इनफैक्ट उससे कम भी आ सकता है. बट एज हैपन इन द स्टॉक मार्केट, जैसा कि स्टॉक मार्केट में होता है, देयर विल बी एनकरेजमेंट फेज व्हेन द पीपल स्टार्ट्स टू थिंक दैट ओके, डन इज डन. नाउ द आउटलुक ऑफ a particular company, or in this case example SBI shares, are likely to pick up, then they again start purchasing it. Okay, so this is the basically again the encouragement phase. So क्या होता है, फिर वो घूम फिर के वही फेज आएगा, फिर accumulation stage, then it will accumulation stage आया फिर से, फिर public participation होगा, कुछ लोग के लिए कंफ्यूजन होगा, देन पीपल विल स्टार्ट सेलिंग. इफ देन पीपल अगर लोग अगर बेचना शुरू कर देंगे, तो मोर एंड मोर पीपल विल आउट ऑफ बिकॉज ऑफ पैनिक विल स्टार्ट टू सेलिंग. तो दिस विल मेक द कंपनी शेयर्स कम डाउन. तो एकदम से डाउन हो जाएगा. फिर डाउन होने के कुछ समय बाद अगर लोगों को लगेगा यस द कंपनी इज लाइकली टू डू वेल, फिर वो शेयर को खरीदना शुरू कर देंगे. देन द इनकरेजमेंट फेज विल कम. सो दिस इज व्हाट द वेरियस phases of this Dow Jones theory. Another very important theory is also the Elliott wave theory. Elliott wave has, you can say, briefed its analysis into two parts: impulsive patterns, impulsive and corrective. दोनों देखते हैं पर्टिकुलर्स में वेरी ब्रीफली. फॉर एग्जांपल, किसी कंपनी के शेयर्स, द शेयर्स ऑफ पर्टिकुलर प्राइसेस ऑफ पर्टिकुलर कंपनी आर इंक्रीजिंग. It's increasing. Then it come down slightly. But please observe that it come down, but it has not come down from this previous level. Then it goes up. Observes that it goes up, and it goes up from the previous level. So at this stage, according to Elliott wave theory, most of the technical analysis will like to buy, because it thinks that yes, it has crossed this previous level, so it is likely to happen in the future also. उनको लगता है कि previous level cross कर गया है, तो और ज्यादा इसके prices जो है वो बढ़ सकते हैं. Again observe, come down, but it hasn't come down from the previous level again. Again it goes up. Observe, it goes up, but it goes up from the previous level. Again at this level, more people will likely to buy. So this shows the impulsive pattern. Out of impulse, out of showing that the previous trends are repeating, the people tend to buy more. What are the principles of the technical analysis? That the prices moves in trends and the history tends to repeat itself. But as then shows the corrective pattern, as happens in the stock market. Because अगर bullish wave आएगा तो bearish wave भी जरूर आएगा. Share prices will somehow come down. So then here it starts to come down. But please observe that it comes down not from this previous level. Again it goes up and then it comes down. Please observe that this level is actually below this previous level. This level is actually below this previous level. So at this level, more people will likely to sell. Why? Or technical analysts will likely to sell. Why? Because they think that, yes, previously it has gone down from the previous level. For example, इस previous level पे 100 था, इससे कम आया, अभी इस level है, this is 95. So previous level से कम आ गया, इसका मतलब और कम आ सकता है. This is such a base though. At this level, the most people who are doing technical analysis are likely to sell. So this is what impulsive pattern and the corrective patterns. And this is basically the crux of this Elliott wave theory. And then we came to the random walk theory. Okay, the query is how Dow Jones theory shows the stages of the investor's confidence. Actually, it depends upon the perception of the investors. As you know, most of the investors actually rely on you can say tips of their friends, relies on the tips of their brokers. They do not give a thorough analysis. But those investors who are doing a thorough analysis, their confidence will, if they are holding the shares, their confidence will actually increase when the share prices will reach its peak. So once the share prices are reach its peak, and it's showing a downtrend, at that stage it will likely to sell. But it also depends upon the technical analyst to technical analyst, one technical analyst to another technical analyst, at what stage it is likely to sell it. Agar technical analyst, if the technical analyst thinks that the previous trend is repeating, because if the trend is showing that, if the particular trend is showing that पहले भी इस तरह से share prices are increasing, then it is coming down, then it is increasing, then it is coming down, then it is increasing, and this trend is shown twice earlier. पहले 2 बार भी इस तरह के ट्रेंड जो कंपनी शो कर चुकी है, और इस ट्रेंड के बाद कंपनी के शेयर्स नीचे गिर गए हैं फॉर सम टाइम. तो अगर ये ट्रेंड फ्यूचर में रिपीट होते हैं, इस तरह के ट्रेंड, दिस ट्रेंड रिपीट्स इन द फ्यूचर, सो इन दैट सिचुएशन ही विल लाइकली टू सेल. उसको लगेगा कि यस, प्रीवियसली भी अगर इस लेवल पे, पर्टिकुलर लेवल पे जब पहुंचा था, एट दिस लेवल, then it came down at the level of 95. Earlier also the prices of prices of particular company came down. So again, when it reaches to 95 later stages, it wants to sell it. So it depends upon the perception of the investor that which stage is likely to sell it. So confidence जो है ये, it differs from one technical analyst to another technical analyst. Okay. Now come to random walk theory. In random walk theory, the focus is entirely opposite to Dow Jones and the Elliot wave. Random walk theorists believe that the share market cannot be predicted. Share market cannot be predicted because the market absorbs every information. Since the market absorbs every information, how can the future can be predicted? I have taken a brief example. For example, there is a fire broke out in a garment manufacturing company. So the news broke out and the company shares come down by 10%. Again, another news came that the company, most of the goods have been, that the company will not be able to get full amount from the insurance company. Again, the company shares go down by 10%. Third day, the news came that the company's, most of the goods have not been damaged in the fire. Then again, the prices go up by marginally by 5%. So the stock prices react to different news in a different way. So news are different. So how can this be this? And it is not necessary that this may be repeated in the future also. So on this basis, how can the future be predicted according to the random walk theorist? So random walk theory is also related to the efficient market hypothesis also, in which case it was also assumed that the market cannot be predicted because the market is efficient. Then we came to the various charting techniques. Okay. So we have seen the line chart in charting techniques. We have seen the bar chart. Anything which you have not understood, please ask. Then we see the Japanese candlestick. I will briefly take Japanese candlestick because it is very important. It is related to bar chart and all the information is there in the bar chart, but Japanese candlestick is superior to bar chart. So I will take a simple example of the, you can say, a Japanese candlestick. So this is basically a classic example of a good, you can say, Japanese candlestick. Let us assume this is a bullish candle. This is a bullish candle. Earlier, you can say this chart are showing in black and white, means if the, you can say, prices are declining, bearish candle, then it is shown by black and the bullish candle is shown by white. Now, in most of the cases in chart analysis, the green, the bullish candle is shown as green and the bearish candle is shown as red. What is a bullish candle? Bullish candle is a candle in which the closing prices are more than the opening prices. Means जिस पे शेयर प्राइसेस बंद हुआ वो ज्यादा है. फॉर एग्जांपल अगर शेयर प्राइसेस 110 पे क्लोज हुआ और ओपन हुआ 100 पे और क्लोज हुआ 110 पे, it means that the share prices have gained rupees 10. So this is showing a bullish trend. That is, the company is likely to, prices are likely to go up. The prices are gone up. So this is a classic example of this bullish, Japanese bullish candle. This is the indicates closing price. This indicates opening price. This is the highest price during the day. And this is the lowest price during the day. Another aspect which shows superiority to Japanese candlestick against the bar chart is the doji candle. Doji means when opening price is equal to closing price. For example, the NSE or a particular share, for example, SBI, this stage opens at 100, it reaches a high of 105, it reaches a low of 102, but finally closes it at 100. So in this case, opening price is also 100 and closing price is also 100. So when opening and closing is equal, this is called a doji candle. So what doji candle indicates? Doji candle indicates that there is a tussle, there is a fight going on between the bull and the bear. Okay, one of them have asked about the point and figure chart. So point and figure chart is slightly complicated, so it is not very used widely. What happens in point and figure chart is that X is shown in every increase. For every increase, X is shown. मैं फिर से इस क्वेश्चन को नहीं लूंगा. I will again, because I have explained it with the help of practical example, I will summarize it. In spite of that, you find any difficulty, please ask. Every increase is shown by X and increase by 1 point. Every decrease is shown by O, by 3 points. X is shown in the point and figure chart. If you see, it is given in your study material also. You can refer the study material. The example was taken from the study material. You can refer the study material also. So every, you can say X is shown, every increase by 1 point is shown by X. And if the decrease is by 3 points, then it is shown by 0. So in that example, you can, as I have remembered, it is increasing by, I think, from 23. So from 23, 24, 25, 26, 27, 28. So up till 28, it is shown by X, for every increase, X. And then every decrease by 3 means 28, 28 तक वो increase हुआ था, 28 minus 3, 25. So 25 से 0 शुरू हुआ देना. So from 25 onwards, 0 is indicated. So 0 was placed besides the, O is placed besides 25, if you can remember. So by this way, the point and figure chart is shown.
Vivek sir?
Yes, sir.
Here there is one more important point regarding point and figure chart, because it is not widely used, because there is one reason that you can say there is because there is a problem is that it does not show the volume and price change. Okay, because normally it ignores the time. Say if time is changing, so we cannot came to know that when the prices are changing. It is one of the main indication, because it is a one-dimensional chart. You can say that.
Yes, very rightly said. It is actually
one-dimensional chart, and there is no indication that time or volume. So that's why it is not widely used. Whereas in other charts, where we can simultaneously, in a line chart, we can show the prices as well as volume simultaneously. Here, this thing is lacking. So that's why it is not widely used.
Yes, yes. So, Koshiki, I think you now must have understood that why it has been not widely used, and it has not much. You have asked about the usefulness, but its usefulness is not much because, as Ashish sir have just said, because the volume is not indicated and not very much clarity. As in case of the Japanese candlestick, the not much clarity is there regarding the closing price, opening price, lowest price during the day, highest pricing during the day. In Japanese candlestick, doji is separately shown that if the opening and closing is equal, then by seeing the doji chart, you can easily make out, yes, in this day, there is a war going on between the bull and bear, and opening is equal to closing chart. And these sort of indication are not shown in the point and figure chart. So practically, point and figure chart have not much usefulness. After that, we come to the various market indicators. Market indicators, we have taken the breadth index. From the breadth index. And breadth index, it is showing the, you can say, net advances or declines by the, you can say, securities traded. That is indicated by the breadth chart. And then we came to the volume of transactions. Volume. Volume of transaction, student, is a very important point. Besides seeing the chart, our technical analysts also go through the volume. So if the share prices are increasing and volume is also increasing, then the technical analysts come to the conclusion, yes, it is time to buy those shares. Similarly, if the share prices are declining and the volume of transaction is also showing the increasing trends, means more and more people are selling it, then the technical analyst in that situation will generally of the view that it's time to sell the shares. So volume of transaction is very, very important. Then we see the confidence index. Confidence index is basically, we have seen that the proportion of high yield grade bonds divided by the low grade bond yields. So high grade bond yields divided by the low grade bond yields. High grade bond yields divided by the low grade bond yields. So if the proportion of these two is less, if there is not much difference between these two, then it is saying that the market there is less volatility, and this shows the increasing confidence. So if the confidence index is high, then it indicates less volatility, more confidence, and more people will be inclined to invest in the stock market. Then we see the relative strength analysis. Relative strength analysis basically shows the relative strength of a particular security in comparison to its peers. Means एक particular company के जो strength है उसके strength है वो in comparison to दूसरी companies की तुलना में कैसा है. तो it relative strength indicators indicate that. मतलब age of a particular company in comparison to its competitors. And lastly, we have seen the odd lot theory in this particular topic. So odd lot theory is basically the contrary theory. I mean, as I just said, that most of the people are likely to, you can say, invest on the basis of the, you can say, tips of the फ्रेंड्स एंड ब्रोकर्स. मतलब अगर ज्यादातर लोगों को लगता है कि हाँ भाई उनके फ्रेंड ने बोलता है कि हाँ इस कंपनी के शेयर्स अच्छे हैं, इस कंपनी के शेयर्स को खरीद लो, या ब्रोकर ने कहा कि हाँ शेयर्स के अच्छे हैं इसको ले लो, न्यूज़पेपर में आ गया हाँ ये प्राइसेस इस पर्टिकुलर शेयर के प्राइसेस इंक्रीज होते हैं इसको बाय कर लो. सो मोस्ट ऑफ पीपल गो बाय दिस वे, बट द very few people will like to actually analyze and then invest in the shares of a particular company. So odd lot theory is a contrary theory, or you can say a conclusion drawn in opposite to what the general people do. Kaushik is asking that what do it indicate? Should we buy at who? Point and figure chart. Yes, if it is decreased by 3 points, constantly showing a decrease, then it is generally time to sell. If your price is decreasing, the generally you can say the intention of the investors at that point, you can say the hunch of the investors at that point is actually to sell the shares. And if it is increasing by 1 point, then the hunch of the investor is to buy it. The general perception, generally the investor do this way. The prices बढ़ रहे हैं तो उसको देखते हुए फिर वो बाय करना शुरू करते हैं. वो अगर इन्वेस्टर्स, अगर कंपनी के शेयर्स कम हो रहे हैं तो उनको लगता है, अगर होल्ड करके रखा है उनको लगता है कि और कम होंगे तो बेच देते हैं. तो ये जनरली बेसिक साइकोलॉजी होती है पीपल के. तो वो चीजें जो है पॉइंट एंड फिगर चार्ट में भी वो वर्क करता है. पर जनरली पॉइंट एंड फिगर चार्ट डज नॉट गिव अ वेरी गुड इंडिकेशन बिकॉज वी कैनॉट see all the information at one place. In Japanese candlestick, as you see, we see all the information at one place. अगर हम जापानीज कैंडलस्टिक को देखते हैं, अगर पॉइंट एंड फिगर चार्ट को आप अगर ये सर
Vivek ji, in the end of the session I will just draw out a diagram and will show the selling point and buying point by the point and figure chart. Don't worry, I will cover it in my end.
Okay, fine.
Okay, don't worry.
Okay, as well just explained that yes, all the information as in the case of bar chart is not bar chart or the Japanese candlestick is not indicated in the point and figure chart. Okay, fine. Okay. Now then we came to the support and the resistance. So support is the price at which support is the level at which the prices will not come down. Support is the level at which the prices will not come down, and resistance is the level at which prices will not go up. The prices will not go up. So is this particular level, this level, this is showing a resistance. Means resistance to go up, resist कर रही शेयर प्राइसेस, इसके ऊपर जो शेयर प्राइसेस नहीं बढ़ेंगे. तो जनरली इस ट्रेंड पे अगर पहुंचते हैं तो जनरली ज्यादातर टेक्निकल एनालिस्ट, मोस्ट ऑफ द टेक्निकल एनालिस्ट थिंग्स that this is the level beyond which the share prices will not go up. क्योंकि एक particular trend, this trend has been shown. This is near to the resistance level. Again, this trend has been shown. So thrice it has happened. Then again, what is happened in the fourth time, most of the investors will likely to sell. If they have not sold it before, they will likely to sell at this point. Because they think that the previously, when the share prices, for example, it reaches 110. This resistance level is 110. So whenever the share prices reaches 110, it fall down. So again, in the fourth time, when the share price reaches 110, most people will likely to sell at this point because they think that beyond this point, the prices will not go up. And this level, this is the support level. मतलब ये एक सपोर्ट देता है, इससे नीचे जो है शेयर प्राइसेस कम नहीं होंगे, चांसेस हैं कि इससे नीचे कम नहीं होंगे. This is established also by the previous trend. This is once. It has come to the support level twice. So is at this point, the investors will likely to think that share prices have come down to this 100. Let us say, suppose this support level is 100. So share prices have come down to 100. जब भी 100 पहुंचता है तो फिर इससे ऊपर उठता है. तो let us at this point buy it. Let us at this point buy it. So most of the technical analysts at this point will tend to buy the share, because from the past trends, it is showing that whenever the share prices reaches 100, it goes up from there. So it creates a support level, and it again supports the basic principle of the technical analysis that the prices moves in trends, and the prices history tends to repeat itself. Okay, so this is support and resistance. And then we came to the various interpreting price patterns. It will take few minutes, and I will take it after a brief break of about 10 minutes. Keep your queries ready. Okay. So I'm taking a break of about 10 minutes. Thank you. हाँ जी, एक सेकंड जरा। हाँ हाँ, लाइव कर दीजिए, बोल दीजिएगा ना काउंटडाउन। Welcome back into this is probably the last aspect of this technical analysis, interpreting the various price patterns. I will take it quickly. We have discussed channel. Channel is basically when the share prices move like this. So it can be upward also, or it can be downward also. It can be upward or it can be downward also. Then we come to a wedge. Wedge means when the support and the resistance moves in opposite direction. You see the share prices moves up. If you see that the share prices are increasing in this way, but this portion is not in above this portion. The second portion is not higher than the third portion. And this third portion is not higher than the second portion. This fourth portion is not higher than the third portion. So this is basically the wedge. See, this is wedges grade. Then we came to the head and shoulders. And head and shoulders is a very important part of this technical analysis. So this is basically the head, this is basically the shoulders, and the neckline is created. So if it breaks the neckline here. So at this point, most of the technical analysts will likely to sell. So this shows a bearish signal. Then another term which is used, which is called the actually inverse head and shoulders, or inverted head and shoulders. Inverse head and shoulders, or the inverted head and shoulders. So this is the head, these are the two shoulders, neckline is created. So when the prices break this neckline, it shows a buy signal or it shows a bullish signal. Then we came to the double top formation, such as these. There is two top, one top and the second top. When it breaks the neckline here, it shows a sell signal or a bearish signal. Then we also studied the double bottom. So one bottom, two bottom, and whenever this break this line, it shows a buy signal or a bullish signal. And then we also shows the gap. So gap means when the closing price, we can say the difference between closing price and opening price is high. Then it also indicates give a good can say indication in the minds of the technical analyst whether to buy the shares or to sell the shares. अगर if for example if there is a prominent bullish candle, अगर बहुत prominent bullish candle है, बहुत बड़ा bullish candle है, इस तरह से green candle है, तो ये एक bullish signal शो करता है क्योंकि ओपनिंग और जो क्लोजिंग प्राइस है, ये जो क्लोजिंग प्राइस है और जो ओपनिंग प्राइस है, दोनों के बीच का गैप काफी ज्यादा है, तो ये भी एक बुलिश ट्रेंड शो करता है. तो जितना ज्यादा गैप ज्यादा होगा वो एक क्लैरिटी जो है वो इन्वेस्टर्स के माइंड में उतना ज्यादा होगा. सो मोर द गैप मोर द क्लैरिटी इन द माइंड्स ऑफ द इन्वेस्टर्स वेदर इट इज अ बुलिश कैंडल और इट इज अ बियरिश कैंडल. Actually 1 2 3 4 I have explained it. Just see this. The share prices are increasing, indicating it 1. Then it is coming down. Okay, it is again increasing, but it is not increasing from the previous level. This 2 is not above 1. Then it is again this coming to this, and here this 3 again it is coming and it is showing this. So all the, you can say, the upward trend is actually less than the previous trend. If you can observe, this second trend is actually less than this first trend. It is going up, it is come down, it is again going up, but not breaching this previous level. Again it is going down, and again it is going up, but it is not breaching this previous level. This third level is not breaching the second level. Then it is again coming down, again going up, but this fourth portion is not breaching this third portion. Okay. So this is what indicates the creation of a wedge, or you can say the support, and it is also, wedge is also said that support and resistance are going in the opposite directions. This resistance and this support, see, these are going in the opposite direction. Resistance this and this support this. These are going in the opposite direction. This is what is wedge is called. Okay. Fine. So let us move forward, interpreting price pattern. After that, I will come across the very important part, which is actually moving average. Then I come to the moving average part. And moving average, I have taken a practical question on moving average also. So moving average can be of two types. It can be a simple or arithmetic moving average, or it can be a exponential moving average. It can be exponential moving average. What is the difference between these two? In simple moving average, the basic focus is on long term. So long term investors basically look into the simple moving average, and the short term investor basically looks into the exponential moving average. Why? What is the reason? Because in exponential moving average, the more emphasis is placed, more importance is given to the लेटेस्ट प्राइस, क्योंकि लेटेस्ट प्राइस पे ज्यादा इंपॉर्टेंस दिया जाता है, इसीलिए जो शॉर्ट टर्म इन्वेस्टर्स हैं वो एक्सपोनेंशियल मूविंग एवरेज को ज्यादा देखते हैं, और जो लॉन्ग टर्म इन्वेस्टर्स हैं वो जनरली सिंपल मूविंग एवरेज को देखते हैं. I have taken a practical problem on the simple moving average and exponential moving average. Any question on that? You are feel free to ask. Then I have taken on the, first of all, then lastly, I will take in the efficient market hypothesis. The last topic on this technical analysis, efficient market hypothesis. There are three aspects of this Fine. There are three aspects of this efficient market hypothesis. First is weak form of weak, semi-strong, and strong. Okay. So what the weak form of efficient market hypothesis indicates? Weak form indicates that the information, the company's market price reflects the past information. The company's market price reflects the past information. Semi-strong efficient market hypothesis assumes that the market reflects not only past information, but public information also. And a strong form of efficient market hypothesis assumes that the market price, the share prices, the market price of a share reflects not only public information, but private information also. Public as well as private. Public as well as private. The efficient market hypothesis का basically जो emphasis है, it is related to random walk theory. So according to random walk theories and the efficient market hypothesis, the market cannot be predicted. Market cannot be predicted because it is efficient. Why it is efficient? Because it actually absorbs, consumes all form of information, whether it is a past information, whether it is a publicly available information, whether it is a private information which is not available to the public, it absorbs all information. So because it absorbs all the information, how can the market be predicted? So according to efficient market hypothesis, the market cannot be predicted. I have taken a question on this weak form of efficient market hypothesis by doing a run test. So any you can say query on that, you can ask anytime. And after that, after technical analysis, I will proceed to valuation of equity shares. Okay, fine. I will take that one by one. How to conclude moving average? How to conclude the moving average solution? Fine. Just give me a second. Okay, in this, it was actually exponential moving average question. It was answer, I think, assignment number 4. It's the answer to assignment number 4. And you can see that the moving average is, exponential moving average is for the 7 trend is bullish. The trend is bullish. Now, okay, let me come to the run test. Just give me a moment. No, actually, Kaushiki, I haven't said that we don't use standard deviation. We have used the standard deviation. First, let us see how we proceed the question. We first of all see what are the number of positives. Positive means how many times the share prices have increased, the index have increased. It is the Sensex have increased up to 11 times. And how many times it have deducted? The share prices have come down 8 times. And number of runs, it is 8. Means number of times the Sensex has changed direction from the upward trend to downward trend. Fine. Then we calculated, and on the basis of this number of runs, whether we can find out that the market is efficient or not, we cannot find out by this. So we, first of all, we calculate the average. Average is coming to 10.26, right? Then we also calculate the standard deviation, that how much it will deviate from this average. So standard deviation has to be calculated at every time. So standard deviation is 2.06. But after calculating the standard deviation, in order to, for further clarification, for further justification, we do the t-test. If we do not use the standard deviation, then how the conclusion will arrive? So whether we can conclude that the market is efficient or not. So that is why this run test is done with the help of the various figures in t-test which is given. So standard deviation will be used, but run test is done in order to conclude that even if we do not consider the standard deviation, whether we be able to conclude that the market is efficient or not. So this is whether this run test is basically an extension of the standard deviation to further you can say justify the conclusion. Okay, in the moving average, see, Koshki, in the moving average, if you see the solution, that there is an uptrend. There is actually an uptrend is showing. I will, okay. The moving average, the solution, if you see, the average is actually going up. If you see, the average is actually going up. The average is on 6th, the average is 14,970. On 17th, the average is 15,416. So it shows that the prices on an average are going up. And more in, as I have said, that in exponential moving average, the more weightage is placed to the closing, you can say the latest price. So it is beneficial for the short-term investors. And we are calculating for a short term, for about this 31-day period moving average. So it's showing a short-term trend that actually on an average, the market are showing an upward trend. Out of the average, what we have taken from the last few days, the market is showing an uptrend. On the basis of the moving average, we can very well conclude, because you have seen that the market is slowly but surely, the moving average is increasing. So it is showing an uptrend. It is showing a bullish trend. Yes. So it is bullish. It is showing an uptrend, therefore it is bullish. But for short term only. It is for the short term investors. Sometimes the long term moving average is also used. 60 days moving average is also used. 100 days moving average also used. In many cases, the 200-day moving average are also used. So it is depend upon the technical analyst, one technical analyst to another technical analyst. Okay. Fine. So I hope this moving average portion and the run test portion is clear to you. Any question in that? I'm taking valuation of equity share, but if any query come to mind in case of fundamental analysis or technical analysis, you can ask in between, no problem. Valuation of equity shares. So after doing all this analysis, fundamental analysis, actually valuation of equity shares is related to the fundamental analysis, because technical analysis purely depends upon the past psychology of the human behavior. So while doing the fundamental analysis, doing the economy analysis, industry analysis, company analysis, then the fundamental analyst came to the valuation of equity. You value the shares to find out whether it is feasible to invest in the shares of the company. So he find out the intrinsic value on that basis. So in these cases, we have taken the three approaches by which the present value of equity shares are found out. Before finding out the present value of equity shares, two concepts which are very important. Generally, how to value the shares? It is intrinsic value or present value. Okay, so both these are used interchangeably. This is the present value of future cash flows. Present value of future cash flows. So it depends which approach you take in. Whether you take the future cash flows as dividend, whether you take the future cash flows as earnings, or whether you take the future cash flows in the form of free cash flow. And then the future cash flows will be discounted with a rate of discount to arrive at the present value. You know the time value of money, so therefore I will not go detail into it. So intrinsic value is basically the present value of future cash flows in the form of dividend, most of the time in the form of dividend. But besides that, when we see the summarization portion, it also includes earnings and the free cash flow also. And the very important thing, that is cost of equity or minimum required rate of return. Both of these are used interchangeably. आप कॉस्ट ऑफ इक्विटी भी बोल सकते हैं, मिनिमम रिक्वायर्ड ऑफ रिटर्न भी बोल सकते हैं. तो ये बेसिकली क्या है? बेसिकली डिस्काउंट रेट है. इस डिस्काउंट रेट को कैसे यूज करते हैं? दिस डिस्काउंट रेट इज यूज्ड टू डिस्काउंट द फ्यूचर अर्निंग्स, द फ्यूचर कैश फ्लो टू अराइव एट द प्रेजेंट वैल्यू. सो हाउ दिस डिस्काउंट रेट इज कैलकुलेटेड? इस डिस्काउंट रेट का कैलकुलेशन कैसे होता है? दो मेथड से. एक बाय गॉर्डन्स मेथड, एक द CAPM model. I have explained in my this session on this valuation equity share CAPM model, that is capital assets pricing model. So basically the formula which is used is KE is equal to P1 upon D0 plus G. Okay, and by CAPM model, how discount rate is calculated? It is RF plus beta into RM minus RF. That is risk-free rate plus beta multiplied by market return minus risk-free return. The Gordon model is also used as a discount rate. CAPM model is also used. What is the difference? Difference is the risk. Because in Gordon's module, the risk is not considered if you observe the formula. In case of CAPM model, the risk is considered. Therefore, in those companies, in case of manufacturing companies, in case of those companies where there is actually large fluctuations, well, there is large fluctuation or the project is risky, in such cases, the beta is used because beta shows the volatility. Beta shows that how the stock prices behave in comparison to the market index. अगर market index 10% बढ़ रहा है, तो stock prices क्या 10% increase हो रही है? अगर market 10% बढ़ रहा है और stock prices 12% बढ़ रही है, okay? If market index is increasing at 10%, but the stock price is increasing at 12%, it is good for the investors. But what about the downfall? If the market falls down by 10%, then the stock will also fall down by 12%. Okay, so this stock is volatile because the beta is high. So beta shows the volatility. So CAPM model is used where there are more risk. So risk is considered in the CAPM model, not in the Gordon's model. Okay. Another aspect which is important is the concept of equity risk premium and market risk premium. Okay. So market risk premium. Market risk premium basically this portion RM means market return minus risk-free rate. रिस्क फ्री रेट आप क्या ले सकते हैं? रिस्क फ्री रेट टैक्स फ्री गवर्नमेंट बॉन्ड्स, और market return, you can say return of the index, for example, National Stock Exchange or the Bombay Stock Exchange, NSE, for example, return of NSE. We expect the return of NSE to be 10%. Okay. I know expect the risk-free rate for tax-free bonds is 6%. So what is the risk premium? Risk premium is actually 4%. Risk premium means the investor which is taking risk by investing in the market is wants some extra return on it. That is what the premium is. So risk premium means whatever risk is taking, the investor is taking, he wants certain extra income on it. That is what is the risk premium is. So risk premium क्या है? इस पे 4% है. That is market risk premium. Another term which is used is equity risk premium. ये क्या है? It is basically beta into this portion. This portion. Beta multiplied by RM minus RF. That is equity risk premium, because if one is investing in the equity shares, it is taking more risk. Tax-free government bonds contains almost negligible risk, and equity shares, investing in equity shares contain risk. Therefore, the investor wants more return. So how much premium wants for the risk taken? So that is why it is calculated by this equity risk premium, beta, and multiplied by RM minus RF. For example, it is coming to 4.8%. Equity risk premium. So this is basically the difference between market risk premium and the equity risk premium. I will take the queries. In the run test, the T value of T is given. So it is not relevant to here to actually the calculation of T. The basic question was on run test. Value of T is given. So you don't need to bother about that, how it is actually calculated. Because it is delving deep into the statistical portion. If this value is given, so there is no problem in this solving this question. Right. Now, let us proceed. Okay. So equity risk premium, market risk premium, I've just cleared it. I hope it is clear to you. Any question you can ask. And now 3 stages of the present value. How present value is calculated? There are 3 approaches. First is dividend based. First is dividend based. What was the second approach? Second approach is earning based. And the third approach is cash flow based. Third approach is cash flow based. सबसे पहले रिवाइज करते हैं डिविडेंड बेस्ड को. डिविडेंड बेस्ड में if the we have seen that if the shares are hold for 1 year, holding for 1 year, अगर 1 साल के लिए होल्ड करते हैं तो उस पर्टिकुलर सिचुएशन में व्हाट विल हैपन? तो इन दिस केस द डिविडेंड विल बी, यू कैन से प्रेजेंट वैल्यू डिविडेंड फॉर at the end of the first year will be discounted, and the price will also be discounted. So it will actually be D1 upon 1 plus K plus Pn upon. So discount rate of the dividend which has been received for the first year and the price which has been received, because आप 1 साल के लिए होल्ड कर रहे हैं, 1 साल बाद आप उसको बेच देंगे, तो जो प्राइस होगा उसकी भी प्रेजेंट वैल्यू निकालनी होगी ना, कि अगर हम आज इसको बेचे होते, आज अगर इसको सेल किया होता तो उसकी प्राइस कितनी होती. So the present value of the dividend as well as the present value of the you can say the selling price will also be discounted, will also be arrived at. Means the prices at the end of first year and the dividend at the end of the first year will be discounted to arrive at the present value. Then we have also seen if it is hold for multiple period, holding for multiple periods. Holding for multiple periods. Okay. In this case, first of all, the first considered is zero growth. 3 stages are also considered in this. If the company is following a zero growth, मीन्स कंपनी ये मान के चलती है कि डिविडेंड में कोई ग्रोथ नहीं होता, और कंपनी अगर ₹10 डिविडेंड डिक्लेयर करती है तो हर साल ₹10 ही देगी, दैट इज जीरो ग्रोथ. सेकेंड एस्पेक्ट इज कांस्टेंट ग्रोथ. We did many problems in the constant growth. We did the practical problems on constant growth rate of dividend also. This is the Gordon approach. These all are Gordon's approach. Constant growth means a fixed dividend is increasing at a fixed rate every year. Means dividend जो है 10% rate से हर साल बढ़ रहा है. 10% every year till infinity. So दो तरह से it can be calculated by two ways. Either it can be calculated separately for every year, or a shortcut formula can also be used. And if it is calculated separately, for example, if we calculate it for this way, P0 is equal to D0 into 1 plus G upon 1 plus KE1 plus D0 1 plus G square divided by 1 plus KE second year, and so on. It will continue like this. Or because of the complicated calculation, because हर साल का अगर हम निकालेंगे 5 साल 6 साल 10 साल का, तो calculations बहुत लंबा हो जाएगा. In order to avoid that, a shortcut formula is devised. What is the shortcut formula? P0 is equal to D0 into 1 plus G upon KE minus G. So this is the shortcut formula. Or it can also be written as D1 upon KE minus G. D0 into 1 plus G लिखें या D1 लिखें. That is, D0 means the dividend at the current, means the beginning of the first year, dividend at present multiplied by the growth rate. So it will come to dividend at the end of the year, which will be discounted to arrive at the present value. But in shortcut formula, it is K minus G. It is assumed that the dividend will be continue to be received till infinite. So it can be calculated by both these approaches. This approach, this first approach, as well as this second approach by devising this shortcut formula. But this formula will be used when it is assumed that the company will receive dividend, the investor will receive dividend till infinity or indefinitely, or for a long time to come. Then the third approach in this dividends made model, third approach is the variable growth rate approach.
Vivekji?
Yes, sir.
Can I interrupt for 1 minute?
Yes, sir.
Actually, here,
Am I audible or not?
Sir, your voice is slightly breaking.
Okay, no problem. Then I will take it at the end.
Okay, sir. Fine.
Okay.
Now come to the variable growth rate approach. In this case, the various models are used. It can be two-stage, or it can also be three-stage. But basically, the logic is same in both these cases. So I will not delve deep into it, because during the course of my, I have taken 2 lectures on valuation of equity share. In my first lecture and the two-stage growth model, I have taken practical examples. I have taken a question on assignment also. So if you have any problem in this variable growth rate approach, feel free to ask. Now we have taken the earning based model. Okay. Earning based model में first approach is Gordon's. So basically the formula which is used is EPS 1 minus B upon KE minus BR. In this case, the basic concept is that the company is not declaring dividend every year, but the company wants to forego dividend and it utilized its earning in the various growth opportunities. So that is why the earning based model is used, and that is why this B is taken. B is basically the retention ratio. B is basically the retention ratio, and this R is basically the return on this retained earnings. Basically the return on retained earnings. And sometimes the growth rate, if not given, growth rate is calculated by this way also. We have did practical problems on that. That is retention ratio. Multiplied by this return on retained earnings. Okay. Then we come to the another way to calculate it by earning based model, Walter's model. Walter's model, the formula we have used is D plus E minus D, means dividend, multiplied by earning minus D, multiplied by the R upon KE divided by KE. So basically it is R is the return on, you can say, R is basically the return on equity, and this is the basically the cost of capital. Basically, it is the return on equity, or the return on, you can say, the retained earnings, the return on retained earnings. We did a small question, Walter's model also, so I will not delve deeper into it. The basic concept of the Walter's model is that if the cost of equity capital is greater than the R, that is rate of return on retained earnings, then the company is you can say, mature company and has less growth opportunities. This is basically an indication the company has less growth opportunities, so it is likely to do well if it can declare more dividend. It's a more cash in hand, and it utilizes those cash in by declaring more and more dividend every year. So in that cases, when the company is declaring more dividend, the value of P0, the present value is more. Twice, conversely, if the KE, that is the cost of equity capital, is less than the rate of return on retained earnings, the company is a growth company. Company is a growth oriented company. In which cases, if the company forego dividends and starts to declare more and more dividend every year, it is likely to gain more profit in the future. It's likely to you can say prosper more. So in such cases, the company declare less dividend. So when K is less than R, in such cases, when the company declare less dividend, the present value will be more. So this is with the basic approach of the Walter's model. Another this last stage of this, you can say, earning based model is basically the PE multiple approach. PE multiple approach, or price earning multiple approach. The price earning multiple approach is, in this case, the P0 is found by multiplying the price earning multiple by the, you can say, earning per share. So both these are estimated. Price earning multiple is maybe estimated on the basis of past figures, and EPS is also estimated on the basis of the past figure, and both of these are multiplied. But price earning multiple does not actually indicate whether we can say the share prices are attractive to buy or not. It only where the particular stock is good or not. It only indicates that whether the particular share prices are cheap or not. That is the only indication which the price earning multiple gives. Then the final approach, free cash flow approach. So we have taken the dividend discount based method, earning based method. Now we'll come to the free cash flow based approach. In this case, we have taken the free cash flow method, and this method is very practically widely used by the companies because of its effectiveness, and especially in case of those companies where you can say growth actually fluctuates, and in case of manufacturing companies, and in case of huge pile up of you can say cash, or whether there is more emphasis placed on cash. So practically this method is more widely used, this free cash flow method. There are two aspects to it. One is free cash flow to firm. So free cash flow to firm, this is basically an unlevered cash flow. So this is basically an unlevered cash flow, means it includes debt as well as equity. So how it is calculated? It is calculated by, this is net operating profit after tax plus interest. Interest is deducted from the profit, but it is unlevered cash flow. Therefore, the interest is added back. Plus depreciation. Any change in capital expenditure, means capital expenditure is deducted, and any change in working capital is also deducted. Next approach to this free cash flow is free cash flow to equity. Free cash flow to equity, which is a levered cash flow. Means after this adjustment of debt. So it will be calculated as net operating profit after tax plus depreciation. Depreciation is added back in order to arrive at the cash flow. Then capital expenditures are deducted. Any change in working capital is deducted. Any debt, new debt which has been issued, is added, and any debt repaid is actually deducted. So this is the free cash flow to equity approach. We have taken a practical example on this also. Just give me a second. Okay, now come to the concept of enterprise value. This is also a very important concept, enterprise value. What enterprise value indicates? Enterprise value is basically the value of a company. In this case, not only the market capitalization is taken, not only the market value of equity shares are taken, but also the debt is also taken. So basically, enterprise value is also called the acquisition price, or it is the price at which the other company wants to acquire it. So enterprise value is basically the price at which the other company wants to acquire it. So how it is calculated, this enterprise value? It includes market capitalization plus debt plus minority interest minus cash and cash equivalents. In this case, one aspect which is mentioned is the minority interest. What is this minority interest? Minority interest is basically the value of those subsidiaries which are not actually owned by the, you can say, the parent company. So these are basically the, that value shows the minority interest, because you know the holding company can hold the subsidiary company not only by way of its holding but also by way of its management control. In this case, cash and cash equivalents are deducted because whatever cash has been expended, expenses have been made, have to be deducted out of the total value. So this is the enterprise value. And in order to arrive at a better conclusion, enterprise value is also, you can say, compared with the sales and the EBITDA, EBITDA, that is earning before interest and tax, depreciation and amortization. So EV is enterprise value is also compared with the sales. So what it indicates? Indicates a higher price indicates that a particular company is expensive to purchase. Means अगर enterprise value जो है sales के comparison में ज़्यादा है, enterprise value और sales के comparison में अगर वो ज़्यादा है, तो इसका मतलब ये है, it means that कि वो कंपनी ओवर वैल्यूड है, तो इसको इस वजह से जो एक्विजिशन कंपनी, जो कंपनी एक्वायर कर रही है, वो हेजिटेंट होगी. अगर लो रेशियो है, लो रेशियो इंडिकेट्स दैट द कंपनी इज अंडर वैल्यूड. सो हाई रेशियो इंडिकेट्स ओवर वैल्यूएशन. द कंपनी इज ओवर वैल्यूड. एंड अ लो रेशियो indicates that the company is undervalued. मतलब अगर एंटरप्राइज वैल्यू सेल्स के कंपैरिजन में उतना ज्यादा नहीं होगी, सेल्स का फिगर थोड़ा सा एंटरप्राइज वैल्यू की तरफ है, तो उसमें लो रेशियो अगर होगा तो उस केस में वो कंपनी अंडरवैल्यूड होगी या फिर उसको खरीदना जो है वो अट्रैक्टिव होगा. Again, enterprise value is compared to earning before interest and tax, depreciation and amortization. This is basically followed in case of capital intensive companies. This approach is basically followed in case of the capital intensive companies. This is basically followed in case of capital intensive companies, which have more depreciation and amortization at their disposal. Then we came to valuation of right shares. Then we came to the valuation of right shares. What is right share? The right share is a share which is offered to the existing equity shareholders of the company at a discount. So, in this case, two things are important. Theoretical ex-right price second, value of right. Okay. Theoretical ex-right price, how is it calculated? Theoretical ex-right price. Is basically NP0 plus S upon N plus N1. Don't go by the formula. Just try to visualize how it should be, what should be the price. X right price means it is the price after the issue of the right shares. So NP0 is nothing but the total market value, the current market value of the existing shares. And what is S? S is basically the subscription price. It is basically the subscription price. Subscription price of what? The subscription price of the right issue. The subscription price of the right issue means total value of the right shares. And NP0, it is basically the current market value of existing shares. Current market value of existing shares. What is N1? N1 is basically the number of existing shares. And what is N is the number of existing shares and N1 is the number of right shares. So simply total value, numerator में क्या रहेगा? Total value existing shares, right shares, और numerator में क्या रहेगा? Total shares, right shares, equity shares. So N is the number of existing shares, N1 is the number of right shares. Here P0 is the present market price, and as I have already been explained. So I have did this problem twice, this X right price, while during the explaining the concept, I have given a practical example. And one question I have also given in the assignment. In spite of that, any question on this right issue, you may please go ahead. Then come to valuation. Valuation of right shares. What is the value of right share? Value of right share is X right price minus subscription price. X right price minus the subscription price. Then the last aspect, we come to preference shares, valuation of preference shares. So this valuation of preference shares is comparatively, you can say, easier because the preference dividend do not fluctuate. What is preference share? Preference share are those shares in which are have preference in regard to dividend and capital in case of winding up the company. So preference shares कौन से shares होते हैं? Preference shares वो shares होते हैं जो कि जिसमें डिविडेंड सबसे पहले उनको दिया जाता है. तो प्रेफरेंस डिविडेंड सबसे पहले दिया जाता है, फिर इक्विटी डिविडेंड दिया जाता है. और अगर कंपनी का वाइंडिंग अप होता है तो शेयर कैपिटल जो है सबसे पहले प्रेफरेंस शेयर होल्डर्स को लौटाया जाता है, उसके बाद फिर इक्विटी शेयर होल्डर्स की बारी आती है. दैट इज व्हाई इट इज कॉल्ड द प्रेफरेंस शेयर्स. तो इन प्रेफरेंस शेयर्स द डिविडेंड इज फिक्स्ड. Equity shares, while calculating equity shares, we see that the dividend can be fixed. It can grow at a constant rate or it can fluctuate also. The dividends can be variable also. But in case of preference share, dividend fixed. So there is not much complexity or there is not much calculation in case of valuation of preference shares. There are two concepts in case of preference shares. Redeemable preference shares and irredeemable preference shares. Redeemable preference shares and irredeemable preference shares. Redeemable preference shares, those which can be redeemable after a certain number of years, on which the preference shares can be redeemed or it can be returned to the preference shareholders. In irredeemable preference shares, the amount which has been raised from the preference shareholders are not returned to them. That is why irredeemable. Then how to value this redeemable preference shares? Here in this case, the dividend is fixed. It will be D1 upon 1 plus R1. R is basically the required rate of return plus D2, dividend at the end of first year. D2 is dividend at the end of the second year. 1 plus R second year, and plus, and so on. After some years, then it will be for example, it is for 3 years. So for 3 years, it will be like this. I will use the term R only because it is preference shares. So this way. So all the dividend at the end of the first year, dividend at the end of the second year, dividend at the end of the third year, all are discounted to arrive at the present value. Similarly, the P3, which is the redeemable price, the preference shares which has been returned to the preference shareholders, this amount at maturity value, this can also be said as maturity value. So this will also be discounted at the discount rate to arrive at the present value. So this way, the valuation of redeemable preference shares is done. We have seen with the help of a practical example also. Now come to irredeemable preference shares. Come to irredeemable preference shares. It is calculated. P0 is calculated by way of a dividend is generally fixed in such cases. So this will be dividend divided by the, you can say, required return on preference shares. Required return on preference shares. Dividend upon required return on preference shares. So, student, this is what about the valuation of equity shares. So I have taken all these aspects, summarize it so that you can recapitulate what you have studied in your, or what you have read in your previous lectures. In spite of many queries have also come, and I have also tried to satisfy your query. In spite of that, if any question comes to mind, please go ahead. Ashish sir, if you have any, please
can you stop sharing the screen?
Sure, sir.
There was one query of a student, I think it's Koshki, or it was she was asking about the how the point figure chart works. Okay, now here I am just presenting you how the buying signal exactly works. Now you see the price start from here. 1 second. Now suppose price start from here. It goes like that. 1 second. Draw. Now price goes like that, up, up. 1 second, 1 second. I think there is some problem. Now suppose price start from here. It goes like that. Up, 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 up. Okay. Now at this moment, or say one more price. At this moment, there is a fall. Now suppose again here, the price goes up. So this is a kind of a buy signal. Okay, I think my video is not working. Let me stop the video. Similarly, when we have when we have to sell, it is a buy signal. One second. Similarly, we can see what is sell signal. Suppose prices is here, it goes down, it goes down, it goes down. Okay, again it rises, it rises, it rises, it rises, then again it start going down. So it is a kind of a sell signal. Now, one or two points I would like to here add that as I have mentioned in my first class, the topic of valuation of equity is opposite to cost of capital concept discussed at intermediate level. Because here, as Vivek sir has told you, like if we want to find out the KE, K is equal to D1 upon P plus G. But here we have to find the P, so accordingly, we reverse the formula and we get this KE minus G. Now, sometimes a doubt raised in the mind of a student whether the figure in examination, especially if dividend figure has been given to you, then what we should assume, whether we should assume it is a D0 or D1, because D1 is equal to D0 into 1 plus G. Here in this context, student, please note that in case if in the examination simple expected dividend has been mentioned, then you consider it as a D1. Okay. Now, if it is mentioned that paid dividend last year like that, you can assume that as a D0. No problem. Then you have to follow that. Now, if something simply has been mentioned dividend, so then in that case, you have a choice. Either you consider it as a D0 or D1. We shall consider both solution as correct. So you know to have any doubt in the mind that what should I assume. And one more point here I would like to that. So Vivek sir has covered very in a good manner. Especially I will like the example he has quoted, like going to the restaurant, then what is the difference between technical and fundamental analysis. And very good example. And in fact, I will appreciate Vivek sir has covered the concept of EV, enterprise value analysis, in a very exhaustive manner, because that the manner in which he has completed taken this concept is beyond the study material also. So thanks a lot, sir Vivek sir, for your efforts. Now I am coming to the next point. Vivek sir has covered one point that is called FC, future cash flow, free cash flow to the equity. Now coming to there is one question come to my sometime mind, why we use the free cash flow to the equity, why we cannot use a dividend. Now student, in this case you should note that normally free cash flow to the equity is normally used when the company does not pay the dividend regularly. Okay, then this method is best. Okay, and if free cash flow corresponds to the profitability of the company, then this method is suitable. Another very important point, generally dividend is used is used in case of minority shareholders, or you can say retail shareholders. When the perspective is controlling shareholder, the controlling aspect, like if any big company wants to acquire a small company, so then normally they don't go by the dividend, etc. They go by the free cash flow to the equity to value the firm. And another point I would like to here cover that there is one term is frequently used in equity is called growth of dividend. Now, student, I will link this concept with the concept that I have covered in the first class, where the concept was sustainable growth rate. Do you see the linkage with each other concept? Now, here sustainable growth rate formula was ROE into B means ROE into dividend payout ratio. So it means the topic we have covered there is also used here, because growth we define it, and this growth rate is used to calculate our post equity valuation. So these things have been discussed in today's class, and in the next class the lectures on the bond valuation will be uploaded shortly. So, and you are requested to go through all the lectures. I will take another class on 14th June, where I will discuss, summarize all the concept relating to bond valuation, and I will, if possible, then I will share some more questions with you. One more assignment will be shared among you that will be uploaded before the class, and I will discuss the same assignment also there. So, one second. If you have any query, please let us know. Otherwise, we wind up the session. One second.
Ashish sir?
Yes.
Ashish sir, you are not audible.
I'm not audible, but one second. Am I audible now?
Yes, sir. Yes, sir. Now you're audible.
Okay. Now I think there is no any query. I'm just stop sharing my screen.
Okay. Shall I conclude, sir? Oh. Okay, students. Thank you so much. Thank you for your patient listening. I have tried to cover all the, try to summarize.
I'm just concluding it. Just done.
Yes.
Okay, Vivek, I'm just concluding it. No problem.
Okay, thank you. Okay, sir. Thank you so much. Thank you for the student.
Okay, student. Thanks a lot. I think first of all, I should thank you.
Thank you so much. Thank you for your kind words. Thank you for the appreciation. And yes, sir.
Okay, Vivek, thanks a lot for your efforts, because I think you have put an extra efforts besides your paper on financial services and capital market. Now, student Vivek, just do one favor for me. Just write it down our email ID, SFM-final.
Sure, sir.
I just forgot to.
I was just coming to that. SFM-final@icai.in. You can reach us at this. If you have any query in mind, please feel free to contact us. You can contact at this number also, 0120 3045 956. So please feel free. Don't be hesitate to post your queries. Thank you so much.
Thank you. Thanks a lot, student. Thanks a lot, Vivek. Thanks a lot.
Thank you so
thanks,
much.
Student. See you next time. Okay. Have a nice day. Session over. Okay. Thank you. Okay.